Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So, my dear friends, yesterday we all got a big shock when gold made this candle. And when gold broke the resistance of 2063, it was clear to us that gold would be bullish. And this is the main reason why I always tell you that after a news, you should always try to follow the trend of the market instead of looking for reversals. And yesterday also we got the proof that following the trend of the market or following the fundamentals or direction, okay, is much more important than the technicals that we follow. Yesterday, gold made a high of 2087, 2088 and ultimately closed at 2082. And this is the current market condition. If you're wondering why it happened, then you need to look at the news. Dollar edges lower and gold soars on weak US economic news. Gold hits record high on Friday. Gold rose to over 2080 per ounce on Friday, marking an all-time high and heading for its second consecutive weekly gain, fueled by the weakening of the dollar and lower treasury yields amid softening US economic data. February's data continued to show a decline in US manufacturing, and the University of Michigan's consumer service indicated a parallel weakness. Furthermore, recent data on Thursday revealed that the annual growth in US inflation for January was the smallest in 3 years. Meanwhile, New York Fed President John Williams recently expressed his expectation of an interest rate cut later this year. And combination of all these factors made gold fly high. And if we look at the chart of DXY or US dollar index, then you can clearly see that dollar index is still inside the range. Dollar index tried to go higher, but it failed to cross the level of 104.20. Dollar index has been trying to break the resistance for quite some time, but it failed. And still inside the range, as long as dollar index is inside the range, things will be more or less same only. And in the coming days, there's a high chance that due to these factors, we will see DXY going down. And if DXY breaks 103.40, it will be heading towards the next support of 102.90 or 103. I will be pasting down the link of these news articles on the description box so that you can read and understand. And this is the hourly chart of US government bonds, and as expected, US government bond was showing weakness when government bond was trying to take support around FIBO 23. Okay, we discussed about the possibility of US government bonds going down because market had already taken support many times around this area. So yes, the area has become weak and we can see that ultimately market broke. On Monday, we can expect the further continuation of the downside, and the next support is around 4.150%. This is the next support on the chart of US government bonds because of previous support around this area as well as FIBO 38.2% retracement level. Heading towards the next support means further weakness on the chart of US government bonds. And if that happens, then obviously gold will be flying high. Gold will be heading towards 2000, 2010, 2150 level. So what are the trading opportunities on gold right now? So if we look at the weekly chart of gold, okay, we can see the weekly chart of gold is extremely bullish. Market is heading higher, and we discuss in early videos we discuss about the ascending triangle pattern, and ascending triangle pattern is a bullish pattern. So if you're a positional trader, then obviously you need to be bullish on gold because fundamentally gold is always bullish, and obviously in the coming days and coming months further upside is very much possible on gold. And on the daily chart, we do not have any particular level. We just see that we have a strong big bullish candle and we have a strong resistance around 2150. And if you are a lover of gold, you have been trading on gold, and you must be remembering the day when gold made a high of 2150. and 2150 seems to be the next resistance. Next resistance doesn't mean that we can expect a complete trend reversal for weeks and months. No. Trend, if the same market sentiment remains, we can just expect a reversal, temporary reversal, and again market will be going up and market will be breaking the resistance as well. Market sentiment is above the levels. So if you're a positional trader, then obviously you need to be on the buy position. If you're a swing trader also, if your positions last for a couple of days to 1 or 2 weeks, then also you need to be on the buy position only. Because of the ongoing market sentiment, we can clearly see that the market sentiment on gold is bullish. So yes, further upside is very much possible. And if you have any buy position also, you can be on the trade. Okay. And if you have exited on Friday and if you're looking for fresh positions on Monday, then yes, you need to wait for retracement. Why? Because the already market is standing at the top. If we look at the market structure is of higher highs, and right now market is standing at the high here. So obviously in this type of market situation, taking a buy at retracement or taking a buy at support is the safest trading strategy. And in front of us we have 2063 and 2048 to 2050. We have these two levels as the next support on the chart of gold, where we can look for a buy position. 2063 because of FIBO 23.6% retracement level, 2048 2050 because of FIBO 38.2, and 2050 previous resistance will be working as the new support. So these are the two levels where you can look for a fresh position as a buyer on gold right now. And as I said, if you already have a buy on gold, no need to exit, be on the trade, because in the coming days further upside is very much possible. Okay, but sometimes we see the market doesn't come for deep retracement because market closed at 2082 and the levels we are talking about are far away from the current market price. 2060, 2048, they are far away. So in that case, okay, in that case we can look for buy around here as well. 2078, okay, 2078 the immediate level, but keep in mind 2078 is not a proper level, so it is also a weak level. So right after the market opening, observe the volatility of the market. Volatility of the market will be playing an important role. If you see the market is coming down with big red candles, then this is not going to work. In that case, you need to wait for 2063. But if you see that market is not ready to come to go down, market is still very much bullish. In that case, you can look for a support around 2078 and 2072. These two levels. But again, I'm repeating, these levels are not very reliable. The volatility will be important. So in short, we have two levels. If market comes for proper retracement, then we have 2063, 2040, 2050, where we can look for support. If market takes support and bounces, we can look for a buy position. But if market doesn't come for proper retracement, then we can look for a risky buy around 2072, 2078. These are the two levels. And if you already have a buy, again I'm repeating, no need to exit, enjoy the ride, because further upside is very much possible. And sometimes market doesn't come for retracement at all. Okay, probably you guys have also seen that. So in that case, you can look for a buy above 2089 as well. Yesterday also we were waiting for retracement, but we also discussed about the buy at breakout above 2052. Honestly, I was not expecting this candle. Okay, but yes, the buy at breakout worked nicely yesterday, and next week also we can expect a buy above 2089. If gold is very arrogant, doesn't come for retracement, we can go for a buy above 2089 as well. But buy retracement is always a safer trading strategy in comparison to buy at breakout, because your risk to reward ratio is always in your favor. And if you're still wondering about the resistance, then obviously 2150, the high made by the market, is there, but 2150 is far away. So before 2150, we also have a resistance or some sellers sitting around 2114, 2115. If you are a daredevil kind of a trader, if risk is your middle name, then you can look for some sell or quick sell around 2114 to 2115 for 30 to 40 pips. But this is very risky because you will be taking a trade against the trend of the market. So if you're not experienced enough, then do not go for sell at resistance. Try to follow the trend of the market, because it doesn't matter in which market you trade. Market has only one rule, that is trend. Follow the trend. Trend is your friend. That's all from my side, my dear friends. Thank you so much. Bye bye. Take care. Have a lovely weekend. Have some great time with your friends and family.